Good evening and welcome to the Teagasc Registered Farm Partnership Step-by-Step webinar tonight. My name is James McDonnell. I work as a farm management specialist in Teagasc, and my colleagues are delivering some of the content tonight, and we have a guest speaker, Sue Canny from the Department of Agriculture also. So I suppose some housekeeping first of all. We will have the three presentations first, followed by questions and answers. So if you have a question or something you think that you want to ask, click on the Q&A tab and type in your question. Given the size of the crowd, there's a good chance that we won't get to everybody's question. So if you put it in anonymously and we don't ask the question, we cannot follow up with you. But if you put in your name beside the question and we don't get to your question, we may be able to follow up with you after the webinar. Tonight's webinar is being recorded, so it will be available for you to view online in a couple of days. So just to introduce our three speakers and I'll introduce them in the order that they're going to speak. So Ruth Fennell is our first speaker tonight. Ruth is a collaborative farming specialist in Teagasc. As part of her role, she provides information and support on the establishment of collaborative farming arrangements such as farm partnerships, share farming, land leasing, contract rearing, machinery shares, sharing of nutrients, so all that collaborative farming area. Ruth has previously worked as both a dairy and a dry stock advisor and has almost 30 years experience supporting farmers in managing their businesses. Our second speaker tonight is Owen Power. Owen works in the scheme support unit within Teagasc. His role is providing technical support to the Teagasc advisors in relation to scheme applications. He has a huge technical advisory experience, having worked as a dairy advisor in Waterford for almost 20 years. This evening he will discuss the process of making changes to herd numbers and will explain some of the schemes that may be of benefit for those considering forming a registered farm partnership. And our final speaker tonight is Sue Canny. Sue is Assistant Principal Officer in the Department of Agriculture in the Farm Partnership Unit based in Dublin. Sue will explain the process of completing the farm partnership application and outline some of the common pitfalls with applications as they receive into her unit. So without further ado, I'm going to pass you over to Ruth. So Ruth, you're already sharing your screen. So I'm going to turn off my camera and let you at it. And when you're finished then, we'll get Owen going. And just a reminder, use the Q&A question tab on your screens. And I will talk to you again at the end of the presentations. So over to you, Ruth.
Thanks, James. So look, what I'm going to just run through with you this evening is just a guideline as to maybe if you're looking at farm partnerships, deciding whether this is the right option for you, for your family or for your business going forward into the future. Some of the benefits, some of the things that you need to look at before you make that final decision, and then how you go about processing that application if you're looking to do one for the near future. So I suppose, what is a registered farm partnership? It's one, as James said, of many collaborative arrangements that we have of bringing farmers together. And it's where at least two farmers make an agreement where they're going to share their resources to enjoy the benefits, such as the economies of scale, improved work-life balance. And in order for this to work, it has to be beneficial for both parties. Everyone needs to be getting something out of the arrangement. It can be one or multiple herd numbers. You can have a maximum of 10 or a maximum of 10 partners as well within that arrangement. And in the case of a registered farm partnership, which is slightly different to some of the other collaborative arrangements, all of the financial operations run through a single bank account. So a bank account is set up in the partnership name or the partner's name, and all of the income and expenditure is run through that bank account. And when we get to the bottom line where we calculate what the profit is, it's that profit that is then divided for the partners in line with the profit sharing ratio that they have outlined in that written agreement that they've developed as part of their partnership application. This profit sharing can be changed over time. There isn't any issue to do that, and it's just a matter of updating the partnership agreement to reflect those changes. There are a good few financial supports that have been produced in relation to CAP support payments and also in relation to tax and revenue reliefs as well too. And in order to be able to avail of those that we're going to run through with you, that partnership needs to be registered with the Department of Agriculture as a registered farm partnership. So what are some of the advantages of forming these partnerships? Where we see two neighbours coming together, we're combining two businesses into one larger operation. We would assume with that we get the benefits of scale. We also are able then to share the workload, which makes it much more efficient from a labour point of view. So we'll often find that each individual will have different skills. They bring their own skills to the table. And it allows then at different times of the year, some people will be doing maybe different jobs, but it allows then people to have, more scheduled time off, that there's somebody there that knows the running of the farm inside out at all times. So if an individual is looking to take time off, it's much easier to do that when we have those skilled individuals there on the farm on a day-to-day basis. We'll also hear of where there's two people there where you were used to working on your own. There's certain jobs that you can't do. You need a second person to do it. And all of those things are benefits, I suppose, of that partnership, of bringing somebody in together working with you. It creates obviously the greater flexibility to allow the partners more time off. And it also provides a business structure for young farmers to come into the arrangements. We often would see that most commonly probably in the family scenario, but we're often seeing this used now more recently for bringing non-farm family members into partnerships. So these are young trained farmers that don't necessarily have a farm themselves to go home to and are coming in on a farm partnership arrangement with an existing farmer and sharing the profits then. And they're also, I suppose, benefiting from the skills of that experienced farmer and then the new ideas of that young farmer coming in on it. And that's where we would also see an area where these are probably going to grow going into the future. I suppose from a family point of view, why would they maybe look at these registered farm partnerships? So I would see it as a gradual transfer of the management and responsibility of the running of the farm. For all the world, it's like an apprenticeship. There's an experienced farmer there. So the parents, that might be, or it could be an aunt or an uncle, has years of experience. There's a young farmer coming in that's obviously been through the college system and has new ideas and new technologies and new things that they would like to try. But there's no replacement for the experience and the knowledge that's also there with that generation that has been farming that farm for years. And the marrying of the two of those we've seen through our farm surveys and the research work that was done in Teagasc, that where we bring the next generation on board into the farming business, we tend to see an increase in performance and also an increase in financial performance on the farm. What allows to happen in these scenarios is that the son or daughter or nephew or niece are then formally recognised in that farm business at an earlier stage. Often in the past, they mightn't have had formal recognition until the farm was actually transferred to them. So by bringing them in on the farm partnership, they're being added to the bank account. They have a role within the farm, they have a role within the decision making, and they feel that ownership as well as part of the process. It also ensures then that the parents or the aunts or uncles are still active in the farm business and that they can provide that support and advice and experience to the next generation as they're coming on board. With the standard registered farm partnership, there's no requirement for land to be transferred. So that partnership can continue as long as they want without there being a requirement to do that. Outside of the family, obviously that mightn't be an option that's going to happen. Within the family scenario, they're permitted to transfer the assets if and as they wish throughout the course of the partnership, and the partnership then to keep running even if all the assets have been transferred onto the next generation, if that's what they wish. It is important in those scenarios that the partnership agreement is updated then just to reflect that change in asset ownership. We'd also hope in these scenarios that we'd get, like with the non-family partnerships, an improved work-life balance. There are also significant income tax benefits that will go through, and myself and Owen will go through some of those Department of Agricultural scheme benefits then as well too. So looking, I suppose, at the collaborative pathways, and as I said, registered farm partnership is one of many. And just to see how it can work here, this is where the current farmer within the family scenario is not currently ready to step back. They're looking about bringing the next generation on board, but they may not at the outset be looking to transfer the assets. And this is where the successor is maybe identified and they know that they want to become involved within that farming business. And it might be an interim arrangement to involve all parties in that business before the actual transfer takes place. So we have the current farmer and the successor coming together, forming a registered farm partnership. During the course of that partnership, they may decide to transfer the assets, as we mentioned, under gift or inheritance, or they may opt for a succession farm partnership. And in the case of the succession farm partnership, you make a commitment that you will transfer the assets over a 10-year period of that succession plan. And at that stage, then it may happen that either the partnership will continue to run or that they may transfer the herd number solely over to the successor at that stage. If we look outside of the family scenario, and just to mention, some of these arrangements actually have been used within a family scenario as well too. And we're going to go through some case studies maybe to demonstrate that. But this is where the current farmer may or may not be looking at stepping back. They haven't maybe an identified successor at home, or they may have a successor that currently isn't ready to take over as of yet, and they're looking for an interim arrangement. They may bring in somebody else on a registered farm partnership, or they may look at those share farming or long-term land leasing options as well too. And those arrangements can continue going forward into the future. They may make a decision then to pass on to the next generation or the successor, who could continue under these arrangements in their place, or alternatively may make a decision that the asset will be sold. It gives them a lot of options to consider going forward into the future. So just to go through a little bit more in relation to the financial benefits. So I mentioned that the significant income tax benefits. In the case of the registered farm partnership, where we allow the family then to maximise the income tax at the low rate. So depending on the profit sharing ratio of what you have set up in the partnership, each individual is entitled to earn up to 44,000 before they pay any high rate tax. If we have a mother, father, and son or daughter in a partnership, that would give us up to 132,000 within a family scenario that could be earned before any high rate tax can be paid. In relation to the stock relief then that Revenue have brought in, the young trained farmers can avail of 100% stock relief. And what we're referring to as stock relief is the change in the value of the stock from the 1st of January to the end of December. Obviously that would come in, that increase in value would be seen as income. And for a young trained farmer, they can get 100% relief on that profit that's generated, in line with their profit sharing ratio. Now, there is a limit of 100,000 over a 4-year period, and a maximum of 40,000 in any 1 year can be claimed. But there's huge benefits, I suppose, for the young trained farmer, where a decision is made to maybe up stocking rates on the farm to allow to cover that additional wage coming in. There is also enhanced stock relief in the case of a family scenario for the parents, or if this is a standard partnership with 2 individuals coming together, they can get 50% stock relief, again on the same ratio as their profit sharing, up to a maximum of 20,000 over a 3-year period. There's also benefits then in relation to the TAMS grant, where under a sole trader, you're entitled to a ceiling of 90,000. And in the case of a registered farm partnership, even if it's a single herd number or FP, they can have a ceiling of 160,000. And Owen will go into that a little bit more. I suppose in relation to the basic income support for sustainability, that's your BIS payment, we have the complementary income support scheme for young farmers, which provides a significant payment of almost 8,000 a year for those that qualify for that, and also the opportunity for them to qualify for the National Reserve where they're eligible. We also have a collaborative farming grant, which is a 50% grant that's provided to new partnerships that are established that contain a young farmer, and it covers 50% of the cost. So for those of you that are looking at forming partnerships this year where you have a young farmer as part of that, 50% of the professional fees associated with setting up that partnership could be covered with this collaborative farming grant. So a maximum payment back then of €1,500, and individuals will be given an invitation to apply for that once they've been issued with their partnership number. So who's eligible then to form a registered farm partnership? So obviously with any partnership, we require a minimum of 2 people, and there's a limit of a maximum of 10 on that. In order to be eligible to form it, we have to have a minimum of 1 Category 1 farmer. A Category 1 farmer is anybody that's been farming for at least the previous 2 years with a minimum of 3 hectares of ground. Then the second partner within that registered partnership can either be another Category 1, so an experienced farmer for the previous 2 years with at least 3 hectares, or alternatively a Category 2. And a Category 2 is anybody that holds a recognised agricultural qualification and will be entitled to a minimum 20% share of the profits as part of that registered farm partnership. Category 3 then can only be added once there is either two Category 1s or a Category 1 and 2 within the partnership. And a Category 3 is anybody that doesn't fall into either Category 1 or 2. So that might be the like of a spouse that doesn't hold a recognised qualification or hasn't previously held a herd number, or it could be a newly formed company. So these are a few examples of it. We have the option of 2 experienced farmers as Category 1s on the first line. The second line then is an experienced farmer and a trained farmer. The third line then is 2 experienced farmers and a Category 3 that didn't fall into either 1 or 2. And the final line is an experienced farmer, a trained farmer, and then a Category 3 applicant. So just to keep that in mind, we can only add in a Category 3 partner where we already have 2 Category 1s or a Category 1 and 2 within the partnership. Just another few points of note: a limited company that's farmed for a minimum of 2 years in its own right can join an RFP as a Category 1, but remember, it has to be running for at least the previous 2 years on the herd number with at least 3 hectares. Also, you can't be represented twice within a partnership. So if you're a director or shareholder within that company, you cannot then be listed as an individual within that partnership. In addition to that, you can only be in one registered farm partnership at a time. And in the case of existing joint herd numbers, it's only one person that will qualify from that herd number as a Category 1 applicant. So if we have an existing herd number and they want to form a registered farm partnership, it's important then that one of them holds a recognised agricultural qualification to be eligible to move forward. So this is just an example here. We have our partner 1, which is our John Murphy. He's been farming in his own right for the previous 10 years with 50 hectares of ground. He qualifies as our Category 1 because he has the 3 hectares and is farming for 2 years. His son James has just completed his level 6 agricultural qualification and will be entitled to a minimum 20% share of the profits, and he will qualify as our Category 2. And then John's wife Joan works off farm as a primary teacher, and she jointly owns some land that they've recently purchased, and she also helps out on the farm as well too. John is our Category 1. His son James is coming in as our Category 2, and because Joan hasn't previously farmed in her own right and doesn't hold an agricultural qualification, she's coming in as a Category 3. And they're going to divide the partnership share ratio up 75 to John, 20 to James, and 5 to Joan. And just to explain, because Joan is working as a primary school teacher already, her salary would be above the 44,000 currently. She's put in at the 5% because anything that she takes from the partnership will be taxed at the high rate. So for tax reasons, that's why she was put in at the 5%. So just in relation to the forming of the partnership itself, there are a few areas that need to be considered that we will run through. The on-farm agreement is basically how things are going to work on a day-to-day basis, how the farm is going to be managed, what roles each person is going to take on. The partnership agreement will highlight what each individual is bringing to the partnership and will also outline what each individual will be then entitled to take out of it if that partnership is ever to be dissolved. It's important that you examine how these will interact with the other department structures and schemes. And it's also important that it's discussed in detail with your accountant to make sure that this is the best and clear option for you to go forward with your farming business into the future. So if you are considering moving into a registered farm partnership, what are the steps that you should take? So the first one is to sit down and discuss it with all the potential partners if this is a preferred option that they would like to do. Run through the template partnership agreement and the on-farm agreement and see if you're all happy with how that would work and how that you could make this forward and a beneficial for all parties involved. Look at it with your agricultural advisors to determine that you're then eligible, that you'll have the 2 Category 1s or a Category 1 and 2 to move forward. And also have a detailed discussion with your accountant to determine if this is the right structure for your business. So if you're looking at forming a partnership this year, but you think maybe in a year or 2 you may be also considering moving to a company structure, it's important that all those factors are taken into account because there could be implications for that. So if you've made the decision to go forward, what do you do next? If the registration details of the herd number need to be changed, so if we're adding somebody to either of the herd numbers, which Owen will go through, then an EOR1 form needs to be submitted to your local DVO or RVO office. A new bank account needs to be set up in all the partners' names and to complete the bank form as part of the application. Your accountant will need to apply to Revenue for a tax reference number for the partnership, and you need to complete the application form, the partnership agreement and the on-farm agreement, and ensure that all of the individuals within that partnership clearly understand the implications of it. You then need to submit that completed application to the department's partnerships office. And ideally that needs to go in by the 2nd of February. So the partnership is assured that they will have a partnership number in time for completing their 2026 BIS application. Failing that, it can go in after the 1st of June. Partnership applications are accepted throughout the year. But just to make sure that we get cleared for payment for 2026, it's either ideally it goes in before the 2nd of February, or alternatively the option is as well too is that you wait until after the 1st of June and it could be changed at that stage. Just in relation to the BIS application then, once the partnership is fully processed and added to the register, the partnerships office will issue you with a partnership number. And going forward then, that number will be used for all your scheme applications. That will be in the format of, depending on what county you're in, so for the like of Cork, where the herd numbers start with D, your partnership will be DFP and then a 5 numerical number after that. So the succession farm partnerships that we added, that we mentioned earlier, the registered farm partnership, there's no requirement to transfer assets, as I mentioned. There is the option to take a further step if families wish. Often what we'd see is that they go into a registered farm partnership first and then maybe opt to transfer to a succession partnership if they choose to do so. It's similar to the partnership, but it involves the transfer of the agricultural assets to the successor. And the partnership has to contain a young farmer in order to be able to avail of that. And obviously they can't include a company, it's only available for natural persons. The benefit of doing it is a tax credit of €5,000 per year for the partners that's split in line with the profit sharing ratio. And that's for a maximum of 5 years up until that young farmer turns 40. The succession agreement specifies then from the end of year 3 until the end of year 10, how those assets are going to be transferred. And it's a requirement that at least 80% of the agricultural assets have to be transferred within that time frame. So they can retain 20% of the assets still at the end of the succession partnership if they so wish. A business plan has to go in as part of that application. And it's important for those that are considering that they take into account that they cannot transfer the land for the first 3 years. So if you wish to avail of the 0% stamp duty for young trained farmers, they would want to be going into that succession partnership before they hit 32. So just a few examples then. This is Eamon and Donncha McCarthy. They're based just outside of Youghal in County Waterford. They're in a registered farm partnership, father and son, and they're planning now on moving into a succession farm partnership. They're suckler farmers. They entered that partnership in 2023 and are currently drafting a succession plan. Both of them work off farm as well too. They have about 40 suckler cows. They bring everything then to finishing. Donncha will be turning 32 this year, so he's anxious that that succession partnership application will go in shortly, allowing him then to still avail of that young trained farmer stamp duty relief. And that €5,000 a year tax credit will be useful for both of them, given the fact that they're both working off farm as well too. The next example is John G. Catherine and Niall O'Connell. They're based in Tipperary, father, mother and son in a registered farm partnership. They were milking originally about 100 cows on the home farm. And on an outside block, then they were using that for cattle and replacements and silage. They formed a registered farm partnership with their son, and they made great use of the double TAMS ceiling under TAMS 2, and also the young farmer payment as well too, in the National Reserve. And on using that funding, they actually put up a new cubicle shed with slurry storage and a robotic milk, and they're now milking 70 cows on that block. You can see an image of the shed that was built on the right-hand side of your screen. And they've now, as part of the process, they've begun transferring parts of the farm to Niall within the partnership structure as well too. The third example here then is Tony McCormick and Chris Cahill. These are one of the farmers that hosted our walk as part of Generation Renewal Week last year. Two unrelated parties. Tony is the landowner, Chris is a trained farmer. They formed a registered farm partnership in 2022. They were originally, Tony was milking 110 cows and had a beef enterprise. They've now scaled up. They've gone to 240 cows. So they're farming under a registered farm partnership, but as part of the arrangement, Tony will cover all of the capital investment in the farm, and Chris covers all of the labour that's involved with it as well too. And they split then the profits 50-50 between the two parties as well too. So that's just a guide in relation to the partnership. And I think our next speaker then is going to go through maybe some of the scheme benefits and also a bit in relation to the herd numbers. I'll hand over to you. Thank you, James.
Thanks, Ruth. So if you stop sharing, Ruth, Owen, you might get going. And there are some questions coming in, and some of them are unrelated to the speakers tonight, so we probably won't get to those when we don't have the relevant expertise. But keep the questions coming in, and Hugh McEnany will read them out at the end of the presentation. So over to you, Owen.
Can you see that okay, James, and hear me
That's all
clearly?
fine. Yeah, everything
That's
is
all.
good. Yeah.
Okay. Okay. Thank you, James, and welcome to everyone. I'm just going to go through herd number changes and some of the scheme supports that maybe benefit people that join into an RFP, and in general, some of the schemes as well. So and just as a presentation outline, I'm going to just go through what a herd identifier system is in relation to the Department of Agriculture. When do you have to change the name on a herd number, and some of the financial benefits, especially in relation to the Young Farmer Scheme, National Reserve, and TAMS. So those are the three areas that I'm going to cover this evening. So just as a thing on the Department Herd Identifier, just remember the Department of Agriculture has an IT system, it's called the CCS, and this is to manage all herd identifiers. The purpose of a herd identifier is mainly, its sole purpose is to manage disease purposes. So there's many different types of identifiers. The herd number being the main one for bovines or cattle. There's also other identifiers available depending on your enterprise that you have at home. So whether it's sheep or tillage or pigs and poultry and horses. So there's different identifiers, and they're identified differently within the system, and also depends on how long you have an identifier. I suppose as CAP and other joined the EU and everything else came about, there's different schemes have been put in place over the last number of years, such as the BIS and Young Farmer Scheme and TAMS and ACRES. And all these schemes and within the department have piggybacked really off of the herd identifier system that was already in place. So each of these schemes are using the herd identifier system as their way of controlling their own new schemes. So just bear that in mind, that the main purpose of a herd number is for disease purposes, but all these other schemes are piggybacking off of this. So that does have implications when you go about changing herd numbers. So before, you heard of DVOs and RVOs. So just a brief little bit of history. Each county had its own DVO, a district veterinary office. And now we're back to 8 regional veterinary offices across the country. These all have a chief veterinary officer, and they all decide how applications are processed and how herd numbers are issued. So each of those regional veterinary offices kind of have their own counties to deal with. As of the 1st of January 2025, a new ER1 application form was produced. There was an old ER1 form and an ER1.1 form. They are no longer in existence. So we have this new ER1 form, which is more consistent. And anyone that's using these this new ER1 form, just bear in mind, it was revised again last October. So make sure that you're using the most up-to-date version of the ER1 form that's there. So this is the ER1 form here on the left-hand side that has been revised since October, and it gives you 5 options on why you should use the ER1 form. One is if you want to register as a new herd keeper. So you're a person that never had a herd number before and you want to apply for it. So that's one reason. Second reason is maybe you have a dormant herd number that hasn't been used in a number of years, and especially if it hasn't been used over 2 years, it must be reactivated. So you have to reactivate it by completing the CR1 application. Maybe you want to change the herd owner on an existing herd number. So maybe you want to add a son or a daughter or a wife or somebody else onto the herd number. Maybe you want to change the keeper only, and I'll explain that in a minute, the difference between herd owner and herd keeper. Or maybe you're adding a different species. So maybe already you have bovines, but maybe now you have sheep coming onto the farm or horses or something else, and you want to add them onto the herd number. So that's the herd number. There's 15 or 16 pages in the application form itself, and it's very important that you consult. There's an information note here on the right hand side, and also a guidance form also that is used, and the two of them should be used in conjunction in completing the ER1 application, because depending on which of the 5 options you pick, there's different boxes that must be completed, and it's important that they're all completed fully. Definitions, just some people, I know it might sound a little bit basic, but some people get confused between herd owner and herd keeper, and what is the difference between the two of them. So a herd owner means that you're an operator as defined under the regulation who has a beneficial interest in the herd and is registering that interest in the application form. So in other words, you are the person that owns that herd number and you have beneficial interest there. The herd keeper is a person, as defined as an operator under the regulation, who is registered to keep the animals of the herd and has not and maybe not be the owner of the herd number, but is responsible for the day-to-day care and welfare of the herd. So it's really the herd keeper is a point of contact for the regional veterinary office or the local DVO people to contact in relation to the animals on that farm. So the keeper is not the owner. He could be the owner as well sometimes if there's only one person involved. But there's the difference. One has a beneficial interest, as in the owner, and the keeper is looking after the animals on a day-to-day basis. So I just picked out 1 or 2 sections within the ER1 application form, and this is where it can be taxing in terms of gathering information. Like the ER1 form takes time to complete and to do it correctly. So section F deals with the premises and the lands that are involved under that herd number. So it looks for the addresses of all farmyards, the home farms and the out farms. Are these owned or leased or rented? If they're leased or rented, when is the expiry date on those leases? The size of the farm in hectares? What folio numbers are involved for those lands, whether they're owned, leased or rented? And also the LIPIS number that's on your BIS application. So all those informations are required for each parcel of land that you're farming or outblock. You also need a map of the location of the farmyard. As I said, you need ownership evidence if you own it, which is the folio numbers. If it's leases, and a lease has to be a stamped revenue stamped lease. So any lease over 12 months is classified as a lease, which must be stamped. A rental agreement is the old 11-month system, but that must be also in a written format as well. That must be included for every block of land that you hold. It goes through the appropriate handling facilities, and it has to be fixed handling facilities. Have you sufficient housing and slurry storage and isolation facilities? And look, a lot of these answers for the facilities is a yes/no answer. They're not looking for dimensions or sizes of houses or slurry storage. They're asking you, have you sufficient facilities on your farm? And there's just on the right hand side, just a screenshot of what it looks like for each parcel of land. There's many other sections within the application form. Section E deals with, are you registered on any other identifiers with the department, any other herd numbers? Section G deals with your herd type. So are you suckler cows, dairy cows, sheep or goats or whatever else is on the farm, and the numbers that you predict to have. Section H deals with wildlife, more so to deal with badgers and are these sets on your farm? And are you taking precautions from an animal welfare point of view and biosecurity? Section I, who is your vet and vet practice that you deal with and their contact details. Section J is to do with bank payment details. So if there's any payments due to that herd number, where is it to be paid to, and have you information on that? Section K deals with authorization of a nominated person. So if you want to, you can nominate somebody else to act on your behalf, and that's done by completing an Auth4 form. And then Section L is where you're agreeing to all the different conditions and agreements and signature, and you have to sign it all. And it has to be signed by both herd owner and herd keeper. And that might be twice if it's the same person, but it has to be signed by both. And also, there's a checklist that must be completed all the way through at the end of the application form to remind you to have you everything. If there's a company involved, have you the company documentation to go with it, the certificate of incorporation or the B1 form, the annual return form, have you all those information as well. So the checklist must be consulted as you go along. Just when do I actually have to change a herd number? So just to kind of simplify it, just to do it, I'm taking it a single herd number in an RFP. So this is where we might have a herd number. It might be Joe and Elaine Burke. They're classed as a joint venture, which was up and running this time last year, and maybe for the years before that as well. There's no changes have taken place since then. Now they're in talks of forming a new RFP for the first time in January 26. The names are still going to be the same as Joe and Elaine Burke. So because there's no change to the herd number name, there is no need for an ER1 to be completed. Okay, because the names are staying the same. If we had a scenario where maybe Brendan Kiley was on the herd number in January 25 and no changes have taken place since, and now he's talking about forming a new RFP with his son Sean in this month, January 26. Therefore, there is a change to the herd number name now because he's adding Sean to the herd number. So a fully completed ER1 application is required. Okay, so just to give you two examples. One, if there's no changes in the herd name, there's no ER1 needed. But where you add a name to the herd number, you must complete a new ER1 application. That's for a single herd number cases. For multi-herd number ones, I'm just taking the same example again, two herd numbers. So there are two neighbours, Bob Murphy and Jack Moore. That's how they were operating on their herd numbers last year. Now they're in talks of forming a new RFP, and they're going to call themselves Bob Murphy and Jack Moore. There's no changes to any of the herd numbers in January 26. Therefore, as there's no changes to the herd number names, there's no ER1 required. Okay, so because they're making no changes. But if we had a scenario where there was two herd numbers, husband and wife, Mary and Tom Nugent, were operating last year as two separate herd numbers, and now they're going to form a new RFP. But Mary is going to bring their son Bill in on her herd number and form a partnership with the husband Tom. Now, because Mary's herd number's name is going to change, a fully completed ER1 application is required for Mary to add Bill to her herd number. But there's no ER1 required for Tom because we're not making any changes to the name on Tom's herd number. So it's only where you make a change to the name on the herd number, you must complete a new ER1 and submit it to the local RVO. Some of the cap payments that are available through registered farm partnerships and how you deal with them. So in a single herd number RFP, all payments and thresholds based on land declared under the one herd number in an RFP. So if we have one herd number, whether it's BIS, CRIS, ANC, is all treated as if it's only one herd number, and whatever the limits are for each of those schemes will be applied. In a multi-herd partnership, the eligible land declared under each individual herd number may only support entitlements held by that herd number. So we have two herd numbers. Each herd number has its own land and its own entitlements. So in reality, there must be sufficient land under each herd number to match the number of entitlements to get full payment. Capping of BIS payments. So if there's a large farm or high value entitlements, each individual herd number is treated separately in terms of capping. To maximize land thresholds will be done at individual level in terms of CRIS and ANC. So if we have two herd numbers, each herd number to maximize CRIS and ANC, they must have a minimum of 30 hectares of under each herd number if they want to maximize them out in terms of CRIS and A and C. Just be careful, some people will transfer land between herd numbers to maximize the CRIS and A and C, but if you're in particular schemes, and just giving acres as an example, be careful not to transfer lands from one herd number to the other to maximize the CRIS and A and C and jeopardize your acres plan. So just be careful, what's in your acres plan is a commitment and a contract under that herd number, so the land must stay with that herd number. From a stocking rate calculations to do with A and C and eco schemes and nitrates, etc., it's all carried out at overall partnership level. So what I mean by that is all the land is added together and all the stock numbers are added together, and one is divided by the other across the partnership level. Because sometimes one herd number might have all the stock, but land might be across the two herd numbers. So it's all treated at partnership level. All active schemes must be notified of any changes to the owners of a herd number. So depending on what scheme you're in, you should consult the terms and conditions of that scheme if you're making changes to the herd owners on that herd number. And each scheme is differently. Some of them you have to give prior notice, where some of them you just have to notify them after you make the changes. So just consult the terms and conditions and make sure you're doing the notification at the right time. In terms of what are the financial benefits, just taking the two examples, the Young Farmer Scheme, which is the Complementary Income Support Scheme. In 25, it was approximately €157 per hectare. So it's not based on the entitlements, it's based on the number of hectares held. It can be paid up to 50 hectares, which is just shy of 8,000 per year, and it's paid for 5 years if the full max 50 hectares are declared. It's an annual application, so just be careful. If somebody was applying for a Young Farmer Scheme in 25 and they make a change to the herd number again in 26, they will have to make a new application again in 26 because it won't automatically appear on the BIS system. So it is an annual application, so just be careful when you make changes that you do it. To receive the Young Farmer application, you must be no more than 40 years of age in the year of first application, and you must have set up during the 5 preceding years. So in other words, if you add a son or a daughter to a herd number in the year 2026, that young person must be 40 or less in 26, and because they only added on the first year, well, then they could apply in 2026. They must have a recognised level 6 qualification in agriculture or better, and the payment rate, as I said, is for 5 years. Now, that is taken, and we have no commitment from the Department of Agriculture. That is only committed to paying for 26 and 27, because that's when the current cap agreement is in existence for. What will happen in 28 onwards is potentially under a different cap agreement, so we can't say for definite it will be paid for the full 5 years, but we know it will be paid for 26 and 27. National Reserve, there's 2 schemes within the National Reserve. One is for young farmers, which again is a person that's less than 40 years of age and has set up within the last 5 years and have their ag qualification. There's also a new farmer category. So this is for people, and age is not counted, but they must have set up within the last 3 years. But they must also have an ag qualification at level 6. What it does is it will give you new entitlements on naked land to the value of roughly €155 in 25 was the payment rate. It will also increase the value if you had low value entitlements up to 155 as well. And a maximum of 50 of these combined is what will be paid out. The only thing with National Reserve, you only have one chance to apply for National Reserve, so there's only one application opportunity. So if you apply for National Reserve this year because you have 5 naked hectares and you get the 5 entitlements, and if by chance you come across 10 extra hectares next year that are naked, you cannot apply again the following year because you have applied already. So you only get one chance at the National Reserve to apply for it. So you want to be sure that you're making the best opportunity when you're doing that application for the National Reserve. In terms of TAMS, just to simplify it, if we have a single herd number that's not in a registered farm partnership, so this is just a normal sole trader, an individual, it could be a company or it could be a joint venture. So they're not in a registered farm partnership. Their ceiling investment is €90,000. Now they can get a 40% or a 60% grant aid on that 90,000. The 60% will be paid if the young farmer or if it's a woman farmer as an individual. So if it was just an individual, one name on the herd number, and that person was a young farmer or a woman, or if they're in a company with a minimum 20% shareholding and a director, they could get 60%. If it's a joint venture, and what I mean by joint venture is there's two names on the herd number, well then those two names must be either two young farmers or two women farmers to get the 60% grant aid. The difference now is with a registered farm partnership, the ceiling investment increases to 160,000. If it's a father and son operation, we say the son can get 60% on the first 90,000, where there's one young farmer, and the balancing 70,000 is paid at 40% grant aid. If there's a woman and a young farmer, there's potentially they could get 60% on the full 160,000 of an investment. And to be classed as a woman farmer, she must be under 67 years of age. If it's a young farmer, he must be less than 41 at the time of application. So those are two criteria, but just to simplify it, a registered farm partnership increases your ceiling and potentially gives you a 60% grant aid rather than a 40% grant aid, especially where there's only one young farmer involved. Again, all schemes must be notified if there's any changes to a herd number name. So depending on when TAMS applications were made and claimed, and if you make a change within 5 years of making the claim, you just be careful that it could cause clawbacks on previous applications and claims being made. So in summary, if you submit an ER1 to the RVO to change, you submit an ER1 to the RVO if you're making a change to the owners of the herd number. It is highly recommended that you keep a copy and request the DVO or the RVO to send back a copy with proof that they received it on a date before the 15th of May. Because if you're making changes now and you want it to come into effect for the current BIS campaign, you must have proof that the date is starting and will start at the date the RVO received the application. You must match land and entitlements under each herd number, in particular for multi-herd partnerships if you want to maximize your CRIS and ANC payments. Apply for the young farmer or National Reserve if applicable, if it suits and if it's the right timing and if the person is under 40 years of age, for the young farmer scheme in particular. You may have to transfer entitlements and probably will have to do it where you always change the herd owners. So wherever you change the herd owners, you have to change the entitlements from the old herd number name to the new herd number name. And as I said, notify any active schemes that you're involved in. There's over 20 different schemes in total, so I can't cover them all. So it depends on what schemes you're involved in. Look at the T's and C's and go to the section on where there's changes to the herd owners of a herd number and see what you have to do. So, James, that finishes me. Thank you.
Thanks, Owen. If you stop sharing, then Sue will be able to put her screen going. We have loads of questions in, so keep sending them in, and when Sue finishes her presentation, we'll be able to go through some of those.
Thank you all very much for attending the webinar this evening. My name, as James said earlier, is Sue Canny. I am the Assistant Principal Officer in the Farm Partnerships Unit in the Meat and Milk Policy Division in the Department of Agriculture, Food and the Marine. So Owen and Ruth went through some of the components of registered farm partnerships. I will go through some of the same components from my perspective as Assistant Principal in the Farm Partnership Units, managing the applications for registered farm partnerships. So just to start, in terms of registered farm partnerships, by way of the background. So in 2002, milk production partnerships, MMPs, were initiated for dairy farmers, and these were managed by Teagasc. Building then on the success of these, and due to the demand from the agricultural community, in 2015, this was expanded to all agricultural enterprises and became known as registered farm partnerships, and were then managed and continue to be managed by the Department of Agriculture, Food and the Marine. So the purpose of farm partnerships, as Ruth touched on earlier, they are primarily to facilitate collaborative farming, improve efficiencies and share responsibilities. As many of you will know, the life of a farmer can be long hours, very little downtime, and can be quite an isolating career path. And the purpose of registered farm partnerships is to improve the work-life balance of farm partners. Also integral to this is the knowledge sharing piece. As both Ruth and Owen touched on, the young trained farmers are a key feature in a lot of registered farm partnerships. So young trained farmers would have a minimum level 6 agricultural qualification. So they can bring a lot of technological advancements, a lot of labour saving initiatives and other types of knowledge into the farming partnership. Then the other side of that, they're rewarded with that knowledge sharing capacity of maybe older, more established farmers who have a wealth and a lifetime of experience to share with them. Additionally, the registered farm partnerships provide access to specific agricultural schemes and incentives, which were touched on by both Owen and Ruth, and access to attractive succession options through succession farm partnerships. Excuse me. So as you'll all know, generational renewal is very high on the list of priorities of the current government. And integral to these are registered farm partnerships by virtue of inclusion of young trained farmers. The generational gap in agriculture in Ireland is typical of both Ireland and the EU agricultural landscape, whereby only 4.35% of farmers are under the age of 35. 37% of farmers at the other end of the scale are over 65, which creates a massive gap from a generational perspective. So in the programme for government, this prioritises supporting intergenerational farm succession. It recognises the challenges of land access for young farmers and also acknowledges the social and structural dynamics of agriculture in Ireland. The establishment of registered farm partnerships, as has been made abundantly clear by Ruth and Owen, it's a complicated process insofar as there's a lot to consider. There's a lot to be gained, but there's a lot of consideration that needs to go into it. Professional advice is very much advocated in the establishment of a registered farm partnership. They're not necessarily a one-size-fits-all. Various farm dynamics, family dynamics need to be considered in the establishment of the registered farm partnership. So there's various sources of advice. So Teagasc advisors or agricultural advisors are very well placed to provide advice on technical issues in respect of registered farm partnerships. Furthermore, they can advise on a wide range of issues, including, but not limited to, registered farm partnership agreements. So that is the template agreement that Ruth referenced earlier, and that will govern some of the criteria in terms of the registered farm partnership and also what's being brought into the farm by the various partners. The on-farm agreement is more of a deep dive into the day-to-day running of the farm. The farm improvement measures can also be touched on and advised by Teagasc or agricultural advisors, who can also advise you in terms of any knowledge gains and skill supports that can be got from that. Teagasc or your agricultural advisor are clearly also, as you've seen from the previous two speakers, clearly very well versed in Department of Agriculture, Food and the Marine scheme access requirements. Another source of advice could be your solicitor or legal advisor. So the registered farm partnerships fall under the registration of Farm Partnerships 2015. So that's the statutory instrument number 247 of 2015. And all partnerships in Ireland are governed by the 1890 Partnership Act. A registered farm partnership is a legally binding arrangement and a contract, so it's very important to consider all potential eventualities. Your solicitor can advise of the legal basis for your registered farm partnership and how this pertains to you, including but not limited to the inclusion of clauses to the partnership agreements to meet with your specific circumstances. As I said earlier, there is a template agreement, but these can be tailored to meet what works for you. Again, it's not a one size fits all. Your solicitor or legal advisor can also advise you on the tax implications, legal obligations, and also EU law. And you have your tax accountant. So your tax accountant will be able to provide a wealth of advice and assistance to including the establishment of your registered farm partnership, annual tax returns, which comprise of the registration of partnership with revenue and also the associated returns, the creation of capital accounts to record capital contributions of each partner, and the profit sharing ratio and salary establishment. So the registered farm partnerships, there are various eligibility criteria. These are all outlined in the terms and conditions and the requirements on the website. The QR code for that will be shared at the end of this presentation. But just on a very high level, the partners must be engaged in the trade of farming. The partnership has to comprise of a minimum of 2, maximum of 10 partners, to include at least one Category 1 partner farming on land for at least 2 years prior to application, plus a second Category 1 partner or a Category 2 partner. That's a young trained farmer who's achieved a green certificate. Ruth's presentation, which set out the various combinations of category partnerships, category farmers, can be very useful for your reference in that regard. The partnership has to commit to a period of operation of the partnership agreement of no less than 5 years. No partner can be in occupation of farmland outside of the registered farm partnership at any time during the period of registration. All payments to the partners arising from the trade of farming must be paid to the farm partnership account. And farmland of partners in occupation of such land shall be no more than 75% from the farmland of another partner. So in terms of the applications that come into the farm partnership unit, the requirements are the checklist. All of these are on the website. Again, the QR code will feature at the end. So there's a checklist, the application form, the farm partnership bank account details, the signed copy of registered farm partnership agreement, a copy of folios of all owned lands, and a copy of leases for all lands leased in, evidence of agricultural qualifications for Category 2 partners, a signed copy of the on-farm agreement. So what comes into my division, the application issues and obstacles. So what will stop the effective and swift processing of your application? Number one is without doubt herd issues. So you must ensure that when you're sending in your application, all herd issues need to be resolved with your RVO or DVO in advance of applications, and the relevant parties must be listed on the herd. Oftentimes we find that the tax reference number or the TRN features under incorrect names. Bank numbers can be missing from application forms. Incorrect bank form can be submitted. So it needs to be the forms that are listed on the website, not just something you've generated yourself. It may have the same details in large part, but we need the correct template. Incorrect folios can very often be submitted. The balance sheet can be blank. On-farm agreement or the omission omits the number of hours worked. And then for your own ease, if you're to contact the department, if you want us to track down the status of your registered partnership application form, I would suggest to you all to, in the email subject line, put in the identifier. So your name and your herd number. If there's a subject line that says registered farm partnership application, that's going to be a lot harder for us to track down. So just make it as easy on yourself. Get all of the correct forms in. Unless they are fully correct, fully received, your application will not be processed. We no longer accept placeholders. If your application is not correct with everything that's required, we will not start processing it. So points to note in respect of your registered farm partnership. The application for processing in advance of the 2026 BIS deadline must be received by the Farm Partnerships Unit by Monday, the 2nd of February 2026. So that's fast approaching. The applications must be emailed to rfpapplications@agriculture.gov.ie. Only fully completed applications with associate requirements will be brought forward for processing, and I cannot stress that enough. And once the registered farm partnership is fully processed and added to the register, the RFP number will be assigned and notified to the partnership. And from that point forward, all Department of Agriculture, Food and Marine Scheme applications should be made using this registered farm partnership number. So once you've entered into your registered farm partnership, once you've got all of your advice, you've spoken to your solicitor, your agricultural advisor, you've got your tax accountant's advice, you'll have accrued some fees in the course of that. So you can then be eligible for the Collaborative Farming Grant. This was a grant introduced under the Rural Development Plan 2014 to 2020. And it's aimed to support and encourage farmers in procuring professional advice for the formation of their registered farm partnerships with a young trained farmer. So this also is integral to driving forward the government's priority in the Programme for Government for Generational Renewal. And as Ruth discussed, 50% of your vouched legal, accounting, advisory costs incurred in drawing up a registered farm partnership, subject to a maximum recoup of €1,500 is what you can be eligible for. So if you have accrued €3,000 in advisory costs, 1,500 of that can be recouped. This is a once-off farming grant, a once-off payment. So gather all of your invoices, put them together in one application, and you can recoup a maximum of €1,500. Subsequent to that, there's quite a number of registered farm partnerships then decide to go down the succession farm partnership route, and they may decide to get some succession planning advice. Even if you don't go down the succession farm partnership route, you are eligible to get some succession planning advice and get a grant associated with that. This was introduced in 2023 under the CAP Strategic Plan 23 to 27, acknowledging the complexities of succession planning. Again, similar to the Collaborative Farming Grant, this is a once-off payment, 50% of vouched legal, accounting or advisory costs incurred in enlisting succession planning advice, up to a maximum of €1,500 for farmers over the age of 60 and actively farming at the time of application. This is again similar to the Collaborative Farming Grant to encourage farmers to undertake professional advice on succession planning. And it also facilitates conversations about intergenerational farm transfer and helps mitigate the risks associated with unplanned transitions. So arising from those can come the succession farm partnership. Just to touch very briefly on those, they facilitate the transition of a farm business from one generation to the next. They provide protection for the transferring farmer through retention of 20% of assets for farmers that don't necessarily want to fully step back. There's an annual income tax breaks of €5,000 for up to 5 years. And it encourages best practice in intergenerational land transfer to address significant generational imbalances within farming, as previously discussed, that being 37% of farmers are over the age of 65. So the requirements of this, again, these are all subject to terms and conditions, which are highlighted on the website, QR code to follow, but the farmer must have been farming on land owned or leased for a minimum of the previous 2 years. The farmland must be 3 hectares minimum, must enter a succession agreement to sell or transfer at least 80% of farm assets to successor or successors between years 3 and 10. The successor must have an appropriate qualification in agriculture, must hold an entitlement to at least 20% of partnership profits, and must not have reached 40 years of age. So as Ruth highlighted earlier, the golden age to enter into a succession farm partnership is age 32. So the business plan, the Teagasc My Farm, My Plan booklet must be completed and submitted to Teagasc for certification. The farm partnership unit will require a copy of this certification for registration purposes. So as you can see, the generational renewal priorities of the government, it does bring into play some significant supportive initiatives. So that's the collaborative farming grant leading into registered farm partnerships. The succession planning advice grant can also lead into succession farm partnerships. But to reiterate, even if you get succession planning advice, you are entitled to the grant. One does not have to lead into the other. So as no man is an island, generational renewal in Ireland and an EU context. So the National Commission on Generational Renewal in Farming, apologies. There was a report published last September which identified 31 recommendations. And for those 31 recommendations, there's an implementation group established within the department to consider these. And there is engagement with stakeholders and public bodies. From an EU perspective, the Vision for Agriculture and Food also identified generational renewal as a priority. So to know that there's a shared priority is very reassuring for Ireland. And this is reflected in the proposals for a post-27 Common Agricultural Policy and now EU Commission's new strategy for generational renewal in agriculture. So as you can see, there's a lot. There's the succession planning, the registered farm partnership, which targets the younger farmers to bridge that gap from a generational perspective. So as I said, these schemes, these grants, the terms and conditions are all detailed on the department's website. So the individual QR codes are there if you want to take a moment and quickly scan the QR code, which will lead you directly into the website and will give you all the contact details you need, the terms and conditions. It will also give you email addresses for my unit in the department, and reach out to us with any questions and we will do our best to assist you in any way we can. So thank you for your time this evening, and I hope you found this informative. Thank you again to Teagasc for inviting me along to speak to you all, and Gur Míle Maith.
Thank you, Sue. If you want to reverse just to the last slide there for a second, if you want to put that one back up again, people might take a screen grab on their phone just to allow them the opportunity to do that. I know it'll be up on the website, but just while the few hundred people that are on the call, if they want to press the buttons on their phone to take a screen grab, they'll have it to save them looking for it on the website in a couple of days. Very interesting presentations from our three speakers. So I'm now going to hand over to Hugh McEnany, who is a colleague of mine, works in the unit with myself and Ruth in farm management. So Hugh has a list of questions. I don't think you'll get to them all, but I'll let you at the speakers now with the questions, Hugh.
Thanks very much, James, and for the panelists, thanks very much for trying to answer some of these questions. If you could keep your answers fairly concise, would be great, because we have lots and lots of questions, and hopefully we'll get through a good few of them in the next few minutes. Look, in no particular order, Ruth, I'm going to nail you first off the blocks. Can a horse breeding business qualify for a registered farm partnership?
It depends on the horse breeding business. If they're recognised and registered with the Department of Agriculture, so they have an equine premises number, they're declaring a BIS application with at least 3 hectares of ground, and they're actively farming the ground as registered farmers with the Department of Agriculture, then there isn't any reason that they can't, as long as they're declaring as active farming. But they still have to meet that requirements. They have to hold an equine number. They have to be completing a BIS application on an annual basis. And need to be registered with the Department of Agriculture as well too. And they obviously then have to meet the requirements to establish that registered farm partnership with the correct category of partners as well.
Thanks a million, Ruth. Maybe to Ruth again, maybe. Is there any age limit on forming a registered farm partnership? Say I'm in my 50s and my parents are in their 70s and we want to join a registered farm partnership. Is there any issue?
There's no issue. We've had the odd case there where maybe the 50-year-old doesn't hold an agricultural qualification, and therefore he can't come in as a Category 2 applicant. So maybe the parents are already on the herd number. As we mentioned earlier, if it's a joint venture, only one of them is recognised as a Category 1. So the son then would need to hold a recognised agricultural qualification to be able to form an RFP with his parents. So that's one area that they could get cut out, but there is no age limit on a Category 2 applicant as long as they hold an agricultural qualification. Or alternatively, if he had a herd number of his own and he was farming for at least 2 years previously on that herd number, he could form a multi-herd partnership with the parents alternatively.
Great. Let's see. So his son is qualified, educationally qualified, and his father passes away, and they were in a joint herd number, not a registered farm partnership, just a joint herd number. Now he's wondering, can he form a registered farm partnership with his mother, who has never farmed but owns the land?
I might just get Sue to clarify that one. My understanding in that scenario is if they were in a registered farm partnership already and the father was deceased, that the mother would, under force majeure, be allowed to step into his shoes. But given that they weren't in a registered farm partnership previously, I would imagine the mother won't qualify as a Category 1. Maybe Sue might just clarify that.
Yes,
correct.
that would be the case.
Okay, so if they were in a registered farm partnership already and the father was deceased, under force majeure, the mother would be permitted to step into his shoes. But if they were only in a joint venture, then unfortunately the mother wouldn't meet the requirements for the Category 1 applicant to form the partnership with him.
Ruth, what's the difference between a joint venture and a registered farm partnership?
So in a joint venture, that's where we have 2 or more names listed on a herd number. Okay. The reason a lot of the schemes that Owen mentioned, that the complementary income support and the National Reserve, that's the minimum requirement for a young trained farmer to get qualified for those schemes, is to be listed on the herd number, listed on the bank account, and to have a managerial role on the farm. They don't require to go into a registered farm partnership. My fear with the joint ventures is in a lot of cases there is no legal protection for any of the individuals within that arrangement. And therefore, if there was an issue with it down the road, it goes back to 1890 partnership law, which is by right a 50-50 split, unless they have a written legal agreement between the individuals outlining how that's going to work. In the case of the registered farm partnership, they can apply for that complementary income support National Reserve. They also get the increase in the TAMS funding, and those young farmers recognised for those qualifications that they have that they don't get recognised for under the joint venture. But they also have the protection of the partnership agreement, which is hugely important. As part of the partnership application, you outline in the capital accounts what each individual is bringing to the partnership. So if that partnership is ever dissolved, the individuals are allowed to take out what they have brought to the partnership once all partnership debts have been settled. So the individuals have huge legal protection in a registered farm partnership that is not afforded to them in the case of a joint venture, unless there is a written legally binding agreement in the background of that, which in the vast majority of cases isn't there.
Thanks a million, Ruth. Owen, you're not getting off the hook. If I have two herd numbers and I go into a registered farm partnership, do I have to pick one of the herd numbers to keep the stock? And what happens to the other herd number? So you have two herd numbers. What happens to one of them?
So it's very important when you have two herd numbers in a multi-herd partnership that none of them, firstly, is end dated. One can be made dormant, and the other one can be made the primary herd number, which all the stock can be held in. But the important thing is not to end date it, because if you end date it, you cannot claim any schemes or submit any applications in terms of land details and that under it. So one generally becomes dormant as such, and you can submit your land details under that and claim your BIS and CRIS and ANC.
Along the same lines, I'm not sure as a Sue or Owen, but can an existing registered farm partnership operate under a single herd number, be changed to add a young farmer with a new herd number to avail of CISYF and TAMS for a second 5-year period? Also, is the ER1 form used for applying for crop numbers, tillage numbers, etc.?
I can answer the first part of that, and I can defer to Owen for the second.
Grand Sue, thanks.
There's about 10 questions.
In terms of the addition of bringing in a new young farmer, am I correct in that, into the registered farm partnership? To change the entities on an existing registered farm partnership, that partnership would have to be dissolved and a new one can be set up. That's not a complex process. It happens quite regularly. But the partnership would then need to liaise with the various different schemes to ensure that their payments are not affected. So in terms of the herd, Owen, I'll defer to you for that.
So the second part,
So the ER1 form, can you use an ER1 form to apply for a crop number, basically?
You can if you want to, but generally a HR1 is used to apply for a non-animal holding herd number. There's also other forms like a PR1 for poultry, a PZ1 for pigs. So there's different forms, but depending on which enterprise you're involved in, just to double check it.
Do all parties in a registered farm partnership actually have to be in the country?
Just to answer that one, when they go on a herd number, they're officially part of the farming business. If they're not residing in the country, you'd have to question how they could be part of the business. It's also important from a scheme point of view, I know Owen would have mentioned it, is a lot of those scheme applications, as soon as you're listed on a herd number, your clock starts ticking from a scheme point of view. So all of those applications for the CISYF, National Reserve and TAMS is within the first 5 years of being registered on a herd number. If you're there's a very high inspection rate with that complementary income support. If they are inspected, you get very short notice. Department inspectors will call out, ask to speak to the individual, and they will grill them on what's happening on the farm on a day-to-day basis. If somebody's residing outside of the country, they will not be able to pass that inspection. And not only will their payments be claimed back, but there are also significant penalties involved with that. So really the partnership is there for those that are actively involved on a day-to-day basis in the farming business. So it will be obviously important as a result, in that case, that they're residing within the country as well too. But they have the option, as Sue said, if they want to add one of the sons or daughters now, and down the road, if there's another son or daughter that's currently abroad that then returns home, they can dissolve that RFP and form a new one and add them at a later stage. There's no issue to do that.
Just to also
Ruth,
follow up on that, if I may.
Sorry.
If I can just follow up on that, just to be very clear that there is an obligation to set down the working hours of each partner in the partnership. There is a legal requirement for working a minimum of 10 hours a week on that farm. So a registered farm partnership agreement is a contract. It is legally binding. And any breaches of that are dealt with by way of penalties along with clawbacks, as Ruth indicated.
Okay.
Given the time, Hugh,
that's a very clear answer. Ruth, one on companies.
Yeah, maybe two more questions given the time.
Two more questions quickly. Okay. One on companies, Ruth. In the case of registered farm partnership with a limited company, the company forms a partnership with the successor. Is that correct? Or would it be simpler to make the successor a director in the company and transfer shares to the company?
That's very much up to the individual family, and they need to discuss that from a family scenario point of view and also discuss the implications with their accountant. So to qualify for the complementary income support and National Reserve and also for the TAMS Young Farmer, they have to be a director and a minimum 20% shareholder within the company. So that would be an option for them to go that route. If they're looking for the increased TAMS funding, then the alternative option was that young trained farmer would remain outside of the company structure. So as we mentioned earlier, they can't be represented twice in the partnership. So they cannot be part of the company structure, but they could be added to the herd number as an individual. They will meet the requirements then for the complementary income support, the National Reserve, and then the young farmers would go up then to the 60% grant rate for the first 90,000 with a ceiling of 160,000. But it is important to note that they can't go into the company and be represented. And there might be different reasons as to why they maybe not want to transfer maybe shares at a certain time. They may actually prefer to transfer agricultural assets first. So it really depends on the individuals as to which route they would like to go. But it is important as well then that company has to be operating for at least the previous 2 years with at least 3 hectares of ground to meet that Category 1 status to be eligible to form the RFP with a young trained farmer.
Thanks, Ruth. Owen, one for you quickly. If I'm applying for the CISYF as a young farmer in a registered farm partnership, am I applying for payment on all the land or just the land that I bring to the registered farm partnership?
That, Hugh, depends whether it's a single herd number or a multi-herd number. So if it's a single herd number, obviously it'll be paid on whatever lands are declared up to a maximum of 50 hectares. If it's in a multi-herd partnership and the young farmer is on one herd number, he will only get paid on that herd number. And if he doesn't meet the 50 hectares, the remaining hectares may be eligible from the other herd number, but it depends on the status of the other herd number. Did it get young farmer scheme before? Has it greater than 50 hectares of land already? So it depends on the status of the second herd number if the young farmer can't maximize the 50 hectares himself under his own herd number.
Great. Sue, final question. Farm partnerships were set up 7 or 8 years ago. Do they need to update anything with you?
No, not unless something has changed. So if their lands have changed, if there's a new partner, or if any of the circumstances that were set down in their original partnership have changed, then we need to be notified. But if everything is the same, no.
Hugh, I might just add to that. We've had a few queries recently in relation to within the partnership structure that assets have been transferred. So maybe all the land has been transferred to the son or daughter as part of a partnership application, and they didn't send in an updated partnership agreement to the partnership's office. In those scenarios, they haven't changed the registration details on the herd number, so therefore the entitlements weren't transferred as part of the land transfer. In the case if the original owner of the assets was deceased, according to their estate, they've already transferred the land to the son or daughter, and it has never, but yet the entitlements still remain their ownership because that was what was outlined in the partnership agreement. So it is really important if they are transferring lands that they would update that partnership agreement to state that the land has been transferred, and also to state in the partnership agreement that the entitlements associated with that land are also being transferred if that's the case to the son or daughter, because we've had a few cases of those where that wasn't done, and it's very difficult then to solve down the road. So it is really important that families do update those partnership agreements to reflect the changes of what's happening on the ground.
Yeah, thanks everyone. Thanks, Hugh, for asking all of those questions. It seems to me that it's all very complicated, and there's 2 grants available, one for setting up the partnership and one for getting the advice. And it might be worth getting the advice first before you form the partnership. So claim maybe that grant first. As we see, so farm partnerships as part of the generation renewal stepping stone process for lots of farms, and they're starting to get popular in the country. And I think there was a couple of questions there just in relation to the 2nd of February from some of the consultants online tonight, Sue, that it's a bank holiday. So I don't think, though, in my head, it's not a closing date. It's more a cut-off point.
Exactly.
Because you're not guaranteeing to get the RFP number back to the consultant before the 15th of May if they get the application, say, on the 3rd of February. So it's not a closing date, it's a cut-off date. So,
Yes,
you know,
we want
if
to
you
be
get
ready
this
to
up,
hit the ground running on the 3rd of February after the bank holiday.
so I assume you might accept applications first thing on the Tuesday morning.
Well, I would say the official line is the 2nd of February. So if people are looking at the bank holiday, I would respectfully suggest get it in the previous Friday for the avoidance of
okay.
doubt.
Well, that's fair enough. I mean, yeah, that's grand. So we've had, I think, close to 400 online tonight. So just a reminder that if we didn't get to your question, if your name is there, we might be able to get back to you in the next few days. The slides and the video will be up on the Teagasc website in the next couple of days. So if you missed anything or you want to listen back to any of this again, or another family member wants to listen to it, you can direct them to our website. I'm sure if you type in Teagasc and collaborative farming, it'll bring you to the page where it will be put up. There'll be links anyway all through the website, so you can find it. So finally, just to thank Hugh for dealing with the questions, Sue for giving up her time from the Department of Agriculture, and Ruth and Owen for their presentations also. So with that, and thanks to the audience for bearing with us and sending in the questions and making this a successful event. So thank you. And with that, I'm going to close the event now.